criteria upfront. During the end of the project, all these things comes to haunt us. If something goes wrong, then it becomes a collective responsibility. You will not find a single guy taking up the hand and saying, I was responsible, I made the mistake. But something goes right, a person who was not also involved, he becomes a claimant that it is because of him it happened. So these issues during the project implementation phase, we need to correct as far as the financing or financial budgeting part is concerned, and with it also, as far as we are concerned, we then have to see how are we going to fund the project. Let's say that's where again the planning stage happens. Let's say there is a certain amount of import components. If the finance department is intimated well in advance, there will be an import component, and these are the likely countries. Don't wait for the order placement to happen. The finance department has to then work with the respective banks and see what kind of sourcing arrangement can be done, because you can't get the limits overnight from a bank. And especially if it's a foreign bank, they have to work with you for certain time. That 2-3 months or 6 months, your finance department, before your appraisal is done, your consents are coming, they would have worked to ensure that these particular process. That's why this planning stage is very, very critical. What we get is everything is at the nth moment, and then we start, let's say, struggling and pulling our head together as to how we should run, where we should run. This planning stage, my friends, is very, very good, and a good amount of our procedures or time gets saved if we are ready to do this. Another thing is from experience, which I find is we don't give any importance is on development of a standard operating practices, as also the delegation of powers right before the project starts. Now this causes a big amount of problem in terms of once you define the procedures, as also the this thing during the implementation phase, it becomes very clear, not only to the F&A department, when it comes to an accounts department, the kind of pressure it is at during the project implementation phase in terms of releasing funds is huge. There will be hundreds of non-compliances, but since we are not put the checker balances, why finance professional is best accustomed in terms of developing an SOP or DOP is, we know the checker maker concept, we will be able to adequately put in controls, define what will be the process of flow of documents upfront, so that whether it is a commercial department or internal projects department, they are very, very clear that this is what the procedure is going to be. And let's say if they have to negotiate or put certain terms, when they are negotiating with the contractor, it is very clear. Today, if you are a developer or a developer, the contractors are very, very legally strong. They spend more time on legal and documentation rather than trying to see how your project has to be done. So similarly, of course, if we are a contractor, the subcontractor is much more legally astute than us. So we need to ensure that we are ourselves prepared for these kind of eventualities which will come through. My view is that this is one area we are extremely weak as finance, as an organization or a country, and we finance professionals have the ability to make the biggest difference is concerned, because whether it is the business plan, whether it is making, whether it is the systems or process or the accounting related aspects, so as to come to it when it comes to implementation, we are there. Implementation, my friends, we are all good. In fact, we are being seen as people who are excellent in terms of implementation, because as far as Indians are concerned, whatever it comes, a problem is concerned, we will find a solution to it. People may give it different jargons like jugaad and other things. So these kind of issues should be used, and we should make use selectively. But our DNA is that we always think in that perspective of trying to fix solutions, and that is where it causes the maximum amount of damage and also defers a project. That's where the projects get, because you are never in control of the entire process, and complexities are increasing, and it's no more an issue. If it's one issue, you can fix and give a solution, but you can't think through the whole chain in that particular manner. So if your planning stage has done out well, when it comes to implementation, from an F&A side, we are being looked at in terms of tying up funds, disbursal. That's one part that people expect you. Any project is concerned, the biggest thing, everybody wants money, and this is where the process, once your business plans are clear, once your budgeting plan is clear, then you are very, very well prepared in terms of negotiating with the lenders. What are the kind of terms you need to have, how to reduce the cost, which are the elements that you want to focus, really comes into play. Second is the development of MIS reports. MIS reports is something you can slightly plan in advance, you can't literally plan, because each project is concerned, there will be some leaps and then there are certain laggards as far as each project may differ. So MIS reports is something that we should develop as the project progresses, because each project may get populated differently as far as MIS reports are concerned. Each one may not get populated at the same time in the same. Certain projects may have certain, as I said, leads or laggards. So MIS reporting is concerned, is essential. Here also the finance function plays a very, very critical role in terms of getting it populated and getting the facts and figures. Apart from compliances, last and important thing is the documentation and correspondence. This is another area that we as organizations and as finance professionals are expected to, are the conscious keepers of any organization. So here also we are required to ensure that this documentation and correspondence process is completed. I will give an example that unfortunately is also of a joint venture. We had this joint venture with a world leader. It was into a particular vertical in which we had no experience. So we entered into a 50-50 joint venture and we gave them the task of managing the project and the operations. So we were a 50%, so to say, silent partner, because the end product was what was required by us. He was a global leader in that particular project. What he did, when it came to the preparation of, mind you, the contract documents, he hired a world-class lawyer. He is one of the top law firms in London. He was preparing the basic contract documents. And we were like questioning, because we did not have the right, but we used to ask him, why are you engaging him? Why can't you engage in Indian? No. They were very clear. They will have a substitute, or they would have some Indian law firm advising them. And it was almost 15 years back. To date, I have not incurred that amount of legal bill on any of my projects. But what I'm coming to is the kind of focus that they had of spending that much of time, effort in drafting a document, getting the commas and full stop absolutely right, the clauses they wanted. They were doing the same thing. They were identified, these are the 5 risks of doing the projects in India. Those 5 risks they wanted to protect. And that is what they got inserted into the documents. They put them in terms of negotiation. They did an international competitive tender. They placed it to a contract. The contract was awarded to a big Indian company, government company. Now, as luck would have it, at the same time during the implementation stage, they were just focusing weekly they used to have a review. At the end of the review, they used to figure out which are the project contractors who are not doing work, or there is some kind of mismatch in schedule. They immediately used to write a letter, put it on record, and put it in the file. We never do that, Indians. On any project, any developer, if let's say my department was right, immediately the project head will say, nahi, wo letter likhenge, again problem ho jayega. But importance of keeping a record is very, very essential. What happened at the end of the project, when it came to commissioning, this guy failed. It was unfortunate for his part that he failed. And he corrected it within 2 months' time. But in that process, he missed the timeline. Because he took that 2 months additional, he mixed the timeline, and my joint venture partner promptly took him to court. Because he had all the written correspondences, the contract was in, and how much did he claim at the end of that period? 150 crores was the total claim, and this is the only claim that the Indian government company has ever made a payment. 150 crores, my entire project cost came with, we had slightly overshot, it came down, it was a 1,200 crores project cost. I got almost close to 15% of my money, just by what? The entire expenditure on that legal thing is recovered. But the thing is, this is what is critical, and we completely, today if I look at internally also, at times I find my project heads or our project heads coming and telling me how to waive. Some problem would have happened because there is lack of correspondence. We are not able to make a strong case against the contractor, and what happens at the end of the day? We have to foot the bill. This is where I am telling you small instances where the cost goes up. If we have the right amount of documentation, if we follow the right correspondence, that's another area. Execution, we are brilliant. But these kind of small legal nitty-gritties and in terms of managing the documentation is a very, very critical element as far as project management is concerned. I would say these are the nuances as far as real project management is concerned, and where we as finance professionals can seek, until unless there is a correspondence, we will not clear the balance. So it is the kind of SOPs and DOPs we prepare. It will come to help us, especially when we are coming to an end of the project, or when the project final payments or let's say there is a clear legal dispute comes up, how to manage them. Friends, as far as the last particular stage is concerned, is the monitoring part of it. And here, I would say we are not as bad as the planning stage, but it is basically upon us, how do we go about with this entire monitoring part. And this is also very, very critical. More important is reviews. You have an MIS report. Certain MIS report comes on daily basis, certain weekly basis, monthly basis. But reports are good enough only if you are reading it. And there are good number of reports which may come daily on your table. If you don't spend those 5 minutes, you don't have to run through the entire report, but you should know these are the only 4 or 5 points I want to say. Please glance over 90% people. If the moment, and once you glance over, you will find that the guy who's preparing, there is a maker checker, both of them also. It's like a computer system, something SAP will do. There would have been a strong deviation, nothing, because everybody is in the process of just pushing it forward. So what happens is you will overlook that, and you will end up discovering it, let's say a month in advance, and the entire process of having a MIS report or a review process really does not matter. So review is concerned, more importantly, we should be able to highlight an issue which is well ahead of time. I will give you an instance of one a failure and one of a success. One is a failure that we had a project head who was too good. We considered him, okay, once we have given a project to him, there is no need to unnecessarily too much keep an oversight on him. So what happened? Our review processes we diluted. We gave a project. At the same time, when there is so much of, let's say, adulation and respect showered on him, he also thought, as and when he should have actually come back and taken some amount of support, he thought it was unwise of him to come back to the corporate office or to look upon others or colleagues and seek advices on certain things. So what he did, he went ahead with the project, taking decisions which he felt was best from his perspective, but not from a holistic perspective. So since we were completely delaying, you completely diluted the process of having a clear-cut review oversight process. You discovered the entire, then finally after a year or so you discovered everything is mess. This is not where I should have had a design, I should have had it this year, I should have not gone for this product, I would have gone for that product. That is why we should continue to emphasize to the management that we need to have the review. We will keep. So these are the learnings in terms of the project management, that reviews are something irrespective of whoever is whatever is the kind of talent that pool that we may have, whoever is the person who is driving it, whatever may be his thing, we need to have a review. And other thing of the review is it helps basically building your second line and the third line, and people tend to learn. So you are not only trying to, it's also a good grooming process for the people who have to take over as far as the next level is concerned. Second part, or the success part, is concerned, we had the particular project which was a transmission related project which was to come up along with it. Now whether we like it or not, these are projects, as I mentioned, are highly in the regulatory regime. We have got to get 10 odd government approvals. These are not the normal MOEF approvals or the forest approvals, but you have various licenses to get. And apart from, so by this entire process, you can't put a fixed timeline. By the time we got all the approvals, we were seeing that we were going to slip into a particular zone, which was a monsoon period, and we had to work on some hills, hilly kind of a terrain. But we had a very strong kind of a review process. So with the help of contractors who are also very, very efficient contractors, trying to see in case if we happen to do it, let's say in that particular time frame, because we had to complete the job in 2 months from the day it comes. So our period was coming down. Then he got the people, like say from Himachal, who were like good in terms of working. I'm saying that when we have a very strong review process, we have spent money, we didn't know whether approval will come, but we got the people in at the right time, so that when it came to the actual process, all the resources optimally were there. And that is how the review process, so review process is something that should basically address any kind of mismatch that you are having with respect to the project's schedules. And these are all the processes under which we as CFOs can really play a critical element in terms of monitoring and getting things done. And more importantly, if any of these issues are happening, we also have to keep, let's say, our other kind of stakeholders, direct stakeholders like the lenders, briefed and try to ensure that the fund flow should not get held up. Or if I have to go and seek certain waivers or exemptions, I should do it well in advance. This kind of proactive intervention is what is extremely critical from a project management perspective. I think these 3 stages and these are all the roles which a CFO can effectively play. And if we are doing this, mind you, except for the regulatory kind of delays, we would be able to address as far as the project management part is concerned in a most efficient and effective manner. So it is project management, in my view, amongst all the things, it is that as we as finance professionals are much more deeply involved than, and at the same time we play a role of a facilitator to the CEO or let's say the promoter in terms of giving them the right kind of feedback so that they can then take the action on the respective item or respective issue. And this kind of the breadth that let's say a finance professional can bring to the table is something that, as I mentioned in the earlier part, doesn't bring. And please take interest in terms of going to the business, and our contribution then to the whole organization and to the project or the business becomes that much more heavier. With this, I will now open the floor to some questions. Please. Yeah. No, IT of course plays now today. If you have implementing SAP or let's say including implementing Oracle, there are project related modules which have started to come up, and these project modules do help. But as I mentioned, these are all modules which will give you online reports. Finally, as far as actionable points is concerned, it is again dependent upon the management on also in the reports. That's where we need to see what are the key things that we want to get highlighted into the reports. As SAP is concerned, there's a very limited amount of customization you can do. However, to define in each project at the early stage itself that these are, and as you go ahead across with the projects, your issues keep on changing. And let's say, depending upon the progress of the project, certain issues are there. Certain amount of customization SAP provides, but Oracle provides greater flexibility, but by over customization we end up destroying that. But Oracle as a package is slightly better than in terms of SAP, in terms of project monitoring is concerned, but there are packages. Yes.
how to make your team continue that particular thing?
See, as a finance professional, what our interventions are primarily through strengthening of systems. So what we have to ensure is, in case documentation is required, primarily in case if there are deviations. And if we have seen deviations happening in a particular project, then in those particular cases, we can seek as far as the documentation has been in place, because you need not have that. So the thing is, let's say there is a role as far as the technical person or let's say the commercial person has to make. We are not the very first person when it comes to the documentation part is concerned. It comes up to after a particular stage. So let's say what we can see is, in case of those, systems and processes should give us an advance warning, and let's say payment approval process should go one level higher. So let's say if in a normal case the payment approval process is at level A, then in case if there's a delay, then it goes to level B or one level higher as far as granting approval. Those are questions are being raised, and then a process check happens whether a particular process is in play or not. That is the only play in terms of getting immediately some kind of a procedure in place so that the organization doesn't suffer. A good portion of the time, try to control the fund flow. Automatically a lot of things will set in place, and that is the key aspect, let's say, the F&A person can play. Yeah.
It will be increasing, and now the even lender also puts condition that cost will be overall should be provided by the company. So such issue, how you did it?
See, my practical experience with lenders are concerned, lenders are not illogical. Okay, lenders do look at the management, and depending upon the management, how much you have put forth, and if there is circumstances which has been beyond your control, then they are also ready to walk a few steps along with you. But in case if the perception is that we have failed in terms of delivering, then yes, it comes. So in general, if you look at the lenders, especially in the Indian context, are very, very soft. If I were to compare it with the Indian lenders. So I think Indian lenders are somebody who gives us extremely long rope. However, what we need to ensure is, when we are going ahead with a project, please build cushions. Let's say, even if my project team gives me an assurance that the project will get completed in 36 months time, we should rather take a 42 months time, or should building certain amount of cushions when to get to the banks, because banks will help you to the extent that, say, RBI gives you a leeway of 1 year or 2 years depending upon what kind of infrastructure or non-infrastructure projects are concerned. But they are, if you have demonstrated that yes, certain external factors, they are, at the same time, please understand that they can't change the debt equity from, let's say, of a project from 75-25 to 80-20 for a project which has got overrun, and where we are not able to show them the feasibility of DSCRs and the FACRs being maintained.
But in that lenders debt equity ratio they are considering, are they considering only long term only, or long term and short term combined they are debt equity ratio?
See, it depends upon each bank. If you look at State Bank of India, they will look TOL, they are looking at total outstanding liabilities to the total net worth. Now, that is does not each bank's parameters. So when they are taking, let's say, the entire liabilities, including current liabilities, they will take in that, then accordingly their ratio they are looking at a different ratio than not, let's say, the long-term debt to net worth kind of ratio. So each bank has its own, but it takes into measure, it is the same at the end of the day, irrespective of which ratio we may look at it. Yeah.
Yeah.
Please.
You said about the government as a joint venture for land acquisition or feedstock supply, and the policies when they decide, that project's validity is dependent on that. And when they fail, do they have some costing to that which they contribute in such joint venture for?
Yeah.
Course of action you can take for the consequences, and total failure of the project or the close of this project?
See, there what happens in terms of government projects is concerned, if you are going through a bidding process, we generally try to address our concerns in the pre-bid conference meetings, that these are certain areas of concerns and it has to get addressed. And let's say if they are not addressing, then you have to price in that risk in your bids. That is why certain people have gone ahead and bid projects very, very aggressively, not taking this particular risk or factoring this risk, then you can't help it. But if you are having a bilateral contract, please negotiate hard with the government at the time when you are signing the MOU or let's say those project documents. It is better to delay by 1 month trying to get what you want in that project, because then with government only what can save is these documents which gives you legal protection. Once you are there legal, finally if something gets held up in the government, they will refer the matter to the legal department, and if you are strong legally, then it is something that you need not worry, eventually you will be able to get back your claim from the government. But if your documentation or your agreements with the government do not provide for that kind of a backstop or let's say downside protection, then it is a risk that you are exposed to and which you should ideally build or let's say take it as part of your let's say the revenue projections.
So earlier you referred
Sorry.
earlier you referred to about that mining project where that land was to be acquired by the government, and you were only involved for the funding. You said you later on only to be done. Would you throw more light on that, how that planning model which we have been discussing? How that planning, at the stage of the planning you were trying to work out?
See, the thing is, it is a unique project in a case that it's a huge amount of land that we had to take. So at the same time, the mine the government wanted to keep with them because they did not want the mine to come to a government sector or into a private sector, because then the private sector will be seen tomorrow to be squatting on a particular mine. So it was a wise decision on the government part not to allow the mine to come, let's say, to the private sector, and they wanted to keep the control of it. Since they were having the control of it, they had to buy the land and give it to me, and they said that you have to bear the entire cost. And since we are bearing the entire cost, we loaded that cost as far as the product is concerned. So as far as I am concerned, even if I am paying, finally I am putting that cost onto the product, I was okay. Now the issue was, let's say if they are taking control, we were not at all comfortable given our experiences of the earlier, whether it is something which will get done in time. That is why we focused as far as documentation is concerned. We slipped part of it, we negotiated part of it, and we ensured that in documentation come what we will give up everything else except for that clause. So we may have given up something else, but we didn't give. I agreed for a slightly half a basis point higher interest rate, but let's say not giving up on this issue. So today that is something which is, so the
security documents were created without the title being in the name of the...
No. I am saying that I will create the security on the land provided it comes, and there was some, I don't want to get into the brass tacks or the wording, but that's what, today there is no, if the lender looks at it, he is also very clear, that's what he agreed. So today the bank cannot go back and say, no, I don't have the security, but that's what the terms which were there on which you lent money to me. So everything is there in writing, legally nobody can contest. That is the issue.
Just this question on, you were mentioning about MIS and reporting systems. Keeping in mind the construction and contracting industry, mostly people are a little disorganized in this industry. That's at least my little experience. So in that case, how do you deal with them and institute the process of regular reporting and meetings, especially when sometimes promoters themselves come from a similar background and they are not so organized? And secondly, even if you institute fund control and you, let's say, do not release payments if XYZ things are done, often the finance department becomes the villain. So how do you deal with these things, softer issues?
See, let us agree that we can't build Rome on a single day. So if there is a learning curve process, important is that learning curve should have started. So where we as finance professionals can play a part is sowing the seed into the minds of promoters or let's say your colleagues that it is essential. So if you look back a few years back, the real estate sector was completely disorganized. Today, to a large extent, the kind of let's say the processes, systems, because they're approaching the markets, the kind of records keeping is significantly improved. So they also need to know the virtues as far as having certain systems and processes, and we have to guide them how it will help them and aid them in terms of decision making. See, the thing is, if you focus on cost, it is very difficult for anybody to absorb, but if you show them the benefits which will come through, any person, rational person will immediately agree for it. And it's a facilitation process, don't expect it to come over time, but if you give yourself a year or 18 months time where nothing is there, it will definitely come through. And that's where we as individuals have to play the part of making it an efficient. At the end of the day, everybody looks up, anything goes wrong, they will again blame, especially the FNA, that you should have put the controls, you should have put the processes, you should have ensured that this would have come through. So we play a very, very close role in terms of this organization building itself is concerned or a project management is concerned. Yes, sir.
Sir, in the college, we teach the students about a discounting rate, NPV and all that. So, in reality, right, in spite of a very well-planned project, ups and downs, they keep on coming. So, do you all keep on changing the discount rate in between, or, you stick to it?
See, as far as the project review part of this particular aspect is concerned, if you are more or less keeping your project cost, essentially this is a project cost related issue. As long as you are trying to control your project cost, yes. If you are going out of it, then you have to worry about the WACC as well as the discounting rates. But generally, I would say we would be trying to keep this, or we trying to see if, let's say to the extent the project cost is going up, whether we have the ability to increase the revenue and ensure that my returns are protected. If we are not able to manage that, then yes, then we go back to the drawing board and see whether my RIRR on the project has come down, let's say from 20% to 18% or 17%, and then what is the kind of ROEs that we are looking at. But yes, it will be done when you really feel that, yes, I am going to hit. Then we have to go back to the drawing board, and let's say if you are listed entities, we take the step of keeping the board also informed of the change in the revenue and as far as the returns are concerned.
Thank you.
Yeah.
Based on the project, how do you convince the lender when there is a hold up, when the project is held because of certain spending, clearance is pending from the agencies?
See, as far as now this is, if you look at the case of Vedanta, it's a very, very classical example where there is no fault of the promoters. However, if you look at the government records and everything, they are putting the entire blame on, let's say, on the promoters, that they should have taken certain steps and they should have taken the MOE of consent and everything. So you don't have much choice in those kind of circumstances, and I would say therein the management will have to come and give some amount of support, because the lender may not have much of an issue today, and that's exactly what is happening with that particular company or the group, is they are trying to service out as far as the debt is concerned. The lenders are not taking any kind of cognizance of issue. So as far as government concerns, as I mentioned at the beginning of my slide, that's why I put the context as the first slide. This particular issue of government approvals is something which is becoming scary for the industry, and that's what industry is lobbying with the government, that we don't want this policy paralysis or policy hurdles suddenly to come up. Please define something right up front and let us see that we are following that. Don't keep changing, because it puts the entire project. So to a certain extent only we will be able to cushion ourselves. Lenders are aware of this, and lenders, I would say, are to a certain large extent helping the companies to sustain, but within the kind of flexibility which has been provided by the Reserve Bank, because they can't go beyond that. And the lenders themselves, let me tell you, are making the case for on this issue with the ministry as well. Correct, but that is unfortunately it is today. If you question it, it becomes contempt of court, because it is something which is coming from the Supreme Court. Now, at the same time, there is, because the courts have adjudicated that there is some amount of illegality and they have put some amount of ban. Now, these are, if you are protected in the, now we have to play the role of trying to see if we can negotiate at the time, put these kind of factors. That is what most of the companies are now trying to do, is put it into the force majeure kind of clauses, that some of these are acts, not of the nature, acts of government, has to become a force majeure. And that is the only way you will be able to protect yourself.
Hello, sir.
You are not expected to spend anything in cash.
Sir, sir, kindly throw some light regarding tools like PERT and CPM.
CBM.
CPM and PERT.
Okay.
P-E-R-T, PERT.
See, I would say these are all modeling kind of techniques, whether it is PERT, CPM, or let's say the S-curve that you want to look at during the particular project implementation phase. And these tools will help you, especially during the project kind of review particular processes, and if as far as your MIS related process is concerned, in terms of seeing any deviations are concerned, or let's say there are, as I mentioned about the transportation particular project, when you had to put up certain thing in time and then trying to see if you want to add those kind of resources are concerned. I would say these are all kind of tools which will help in terms of the decision making is concerned, and either you use PERT or you use your own traditional customized organization driven models, each one works. So I would not say that definitely you have to follow in PERT and it gives you the best. If there are different organizations today, they are all customized most of these models to meet with their requirements. Thank you.
Thank you very much, Pramod. Pramod has very vast experience of setting up, power plant project, and I think he very ably shared his experience by way of a very meaningful presentation. Thank you very much. And the questions also he replied, to the satisfaction of the participants. May I now request Mr. Sripad Vaidya to propose a vote of thanks.
So, if you have an artist and how does he plan his work? So I understand, I'm not an artist myself, but I understand from few artists that 70% of his time is in kind of sharpening the pencil and 30% is actually drawing. And that is what Mr. Pramod Menon has actually told all of us here. And as a participant as well as part of this whole forum, I really feel privileged to thank Mr. Pramod Menon on behalf of Indian Merchant Chambers and Chamber of Tax Consultants, and we are really happy that he not only actually gave a kind of PowerPoint presentation, but he was more focused on terms of what exactly happens from a government view, a banker view, a legal view, a third party view. How do you actually handle cost overruns? How do you handle the cyclical variances? So on and so forth. And it's been really a privilege, sir, to have your session here, and we're really thankful and hope to see you more often to the Chamber of Tax Consultants and Indian Merchant Chambers. Thank you so much.
Break for lunch and reassemble at 1:30.
Friends, all the delegates are standing behind. May I request you to take the seat? Friends, I welcome you to this first session post-lunch. And the topic is that role of CFO with the board meetings. We have with us CA MM Chitle, who was the past president of Institute of Chartered Accountants of India. He was the president in the year 97-98. Been the Central Council member from the period 1985 to 1998, and has been worked with the various committees. He has been part of the various government committees such as Dr. S.A. Dave Committee, Verma Committee, Company Law Advisory Committee, Advisory Board of Bank, Commercial and Financial Frauds. He is also appointed as the chairman of the National Advisory Committee on Accounting Standards by Ministry of Company Affairs, which we know as a NACAS, since February 2011. He is also member of the Governing Council of Bank Codes and Standard Board of India, Group of Amalgamation of Urban Cooperative Bank. He has been nominated by the SEBI as a Public Representative Director on Stock Exchange from the period October 98 to July 2000. He is working as an independent director on the board of various companies. With this brief introduction, we welcome Shri M.N. Chitle and request you all to put your hands together to welcome him. Before he takes up his presentation, may I request Vipul Choksi, chairman of the committee, to present him in a memento as a mark of love and affection. Sir, floor is yours.
Can I? Yeah, thank you. Good afternoon, friends. The people on the chair in the dais, people on chair at various places, and I think thank you very much, Chamber of Income Tax Consultants and the Indian Merchant Chamber, for inviting me to speak here. Mr. Savla asked me, can I sit and speak? I think it was a natural question. You know, normally for a fellow speaker, one says, okay, can you sit and speak? I said, okay, at least let me stand up so that I have no temptation to sleep. And I think for you the choice is very clear. You had very good food. On a Saturday afternoon post-lunch is not the ideal place to listen to somebody on a dull topic like audit committee, board, CFO, etc., etc. I think there are many other things which you can enjoy in life, and certainly not this kind of work. But fine, sometimes you have to pay a penalty for agreeing to do something. And I think all of you agreed to attend this conference either on your own or because your company sends you or somebody from here gives you a call. But I think, so you take the consequences. I think that's the way we'll go about. I was also trying to talk to people, finding out what does one expect out of a program like this. See, the program is organized by Indian Merchant Chamber, Chamber of Tax Consultant. Now, Chamber of Tax Consultant, as the name suggests, should be more on taxation. But as I